members of the board of CPJ, esteemed shareholders, ladies and gentlemen, both in person and online, members of the media, I'd like to welcome you to the Caribbean Producers Jamaica Limited Annual General Meeting. I'm now going to invite Stephen there, who will come up to read notice of the meeting on behalf of the Corporate Secretary. You'll also do the apologies for absence and receipts of proxy. Stephen?
Good afternoon. The notice of the meeting will be read by myself, Stephen Dare, on behalf of the Corporate Secretary. The notice of the Annual General Meeting. Notice is hereby given that the Annual General Meeting of Caribbean Producers Jamaica Limited Group will be held at Terra Nova Hotel, 17 Waterloo Road, Kingston, 10, Jamaica, on Wednesday, the 29th, July 2026, at 2, well, it says 2, it's 1 p.m., for shareholders to consider and, if thought fit, to pass the following resolutions. Ordinary resolutions. 1, to receive the reports of the directors and auditors, the audited accounts of the company for the financial year ended 31 December 2025, to consider and, if thought fit, pass the following resolutions. That the reports of the directors and auditors and the audited accounts of the company for the financial year ended 31 December 2025 be adopted. 2, in accordance with the Article 102 of Companies Articles Incorporation, Mr. Stephen Dare, myself, Mr. Anthony Markhart, Mr. John De Silva, retire from the office of rotation and being eligible offer themselves for re-election. To consider and, if thought fit, pass the following resolution. A, that myself, Stephen Dare, who retires on rotation and being eligible for re-election, be and is hereby re-elected a director of the company. B, that Mr. John De Silva, who retires by rotation and being eligible for re-election, be and is hereby re-elected a director of the company. C, that Mr. Anthony Markhart, who retires by rotation and being eligible for re-election, be and is hereby re-elected a director of the company. 3, to appoint auditors and authorize the directors to fix the remuneration of the auditors. To consider, if thought fit, the following resolutions. Resolution 3A, that the directors be authorized to appoint the auditors. Resolution 3B, that the directors be authorized to agree the remuneration of the auditors. 4, to fix the remuneration of the directors. To consider and, if thought, pass the following resolution. That the amount included in the audited accounts of the group for the year ended 31 December 2025 as remuneration for their services as directors be hereby approved. Dated this June 7th, 2026 by order of the board. Okay, apologies for absence. I have apologies from Anthony Markhart, Candice Hart, and our company secretary, Teresa Chin. The proxies that I've received are the proxies that I received: A.S. Bryden and Sons Holdings Limited, in favor of John De Silva or Richard Panduri. So thank you. Have a great afternoon, everyone.
So Mr. Juan Baez was actually appointed as interim CEO for the CPJ group 1 month before Hurricane Melissa. So he has had a real baptism of water and wind and everything else. So I'd like to give your support as Juan Baez comes to give the CEO's update.
Thank you, Richard. Thank you, Chairman. Good afternoon, members of the press, the media, shareholders, partners, colleagues. Thank you for joining us for our general meeting. If I had to define the 2025 financial year for CPA in just 2 words, there would be disruption and resilience. As we all know, our financial performance this year was significantly impacted by the devastating hurricane, which affected every aspect of our ecosystem, from our infrastructure, our employees, our customers, and the wider Jamaican economy. Many Jamaicans lost their homes and access to basic necessities. Several members of our CPJ family were personally affected, and they're still recovering, having to rebuild their lives while still working to support our operations. Their courage and commitment have been nothing short of inspiring. As a company, we also step up, working alongside relief agencies and partners to help ease the hardship across our communities. To the hospitality business, the retailers, the wholesalers, and the many small, medium-sized businesses across Jamaica who are rebuilding with determination, we salute you. Naturally, the disruption has a material impact of our performance during what is a traditional, our higher season periods. Many of our hospitality partners are still operating under below normal circumstances and capacity. A full recovery for some of them, it might strain into late 2026 or early 2027. Because of this, our gross financial for 2025 came in at $152.08 million, down from $156.96 million during 2024. This reduction would have been graded had it not been for our strengthened partnerships and new business obtained during this period. However, in face of these challenges, our management team responded with urgency, discipline, and laser focus on long-term growth. The year demonstrated the underlying strength of our business. Most notably, we delivered improved cash flow and a stronger working capital management. CPJ generated positive operating cash flow of $5.26 million. We achieved this through a strategy, reduction in inventory. We improved our collections, tightened management of payables, and the insurance recoveries. We also kept our administrative expenses controlled despite ongoing inflationary pressures. One of the most encouraging developments this year was our deeper integration with the wider separate and Brighton's ecosystem. By leveraging the regional logistic distribution, our procuring capabilities, we have positioned CPA for the massive growth. This partnership creates meaningful potential to expand our reach in the retail trade and to accelerate our export opportunity across the Caribbean. While we're encouraged by these results, we are realistic about the work ahead of us and our priorities for 2026 are clear. Rebuilding our operation excellence, we will continue repairing our infrastructure, replacing our equipment damaged by the hurricane, restoration efforts progressing well, and we remain focused on improving operational reliability and customer service. Deepen integration. We will further integrate with the separate and the brightest ecosystem to drive efficiencies in warehousing, logistics, and shared service. Financial discipline, we will continue to strengthen our working capital management and improve our cash conversion. Our regional expansion, we will leverage our expanding regional platform to drive stronger export sales and deepen our market penetration. Product growth, we expect to see a meaningful growth with our manufactured product portfolio, even with a temporary dip in demand from parts of the hotel sector. And not last but least, our people. Above all, we will continue creating an environment where our people can recover and feel proud of their contributions. The road of food recovery will take time, but the future is incredible bright. CPJ is emerging from this crisis stronger, more integrated, and more resilient than ever before. We are positioned to deliver sustainable growth over the long term. On behalf of the management team, I want to sincerely thank you, our board of directors, our employees, and our financial partners. And you, shareholders, thank you for your continued support, patience, confidence during this challenging period. Thank you.
Thank you, Juan. We'll now have our auditor's report, and that will be read by Ms. Tanisha Hackers from PwC.
Chairman Richard Pandui, Executive Management, Directors, Shareholders, Media, good afternoon. Independent Auditors Report to the members of Caribbean Producers Jamaica Limited. Report on the audits of the consolidated and standalone financial statements. Or opinion. In our opinion, the consolidated financial statements and the standalone financial statements give a true and fair view of the consolidated financial position of Caribbean Producers Jamaica Limited, the company, and its subsidiaries together, the group, and the standalone financial position of the company as at the 31st of December, 2025, and of their consolidated and standalone financial performance and their consolidated and standalone cash flows for the year then ended in accordance with IFRS accounting standards and with the requirements of the Jamaican Companies Act. What we have audited. The group's consolidated and standalone financial statements comprise the consolidated and company statement of financial position as at the 31st of December 2025, the consolidated and company statement of comprehensive income for the year then ended, the consolidated and company statement of changes in equity for the year then ended, the consolidated and the company statement of cash flows for the year then ended, and the notes to the financial statements comprising material accounting policy information and other explanatory information. Basis for our opinion. We conducted our audit in accordance with the International Standards of Auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the consolidated and standalone financial statements section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with the International Code of Ethics for Professional Accountants, included International Independence Standards, issued by the International Ethics Standards Board for Accountants IESBA Code, as applicable to audits for financial statements of public interest entities. We have also fulfilled our other ethical responsibilities in accordance with the IESBA Code. Our audit approach, audit scope. As part of designing our audits, we determined materiality and assessed the risk of material misstatements in the consolidated and standalone financial statements. In particular, we considered where management made subjective judgments, for example, in respect of significant accounting estimates that involved making assumptions and considering future events that are inherently uncertain. As in all our audits, we also addressed the risk of management override of internal controls, including, among other matters, consideration of whether there was evidence of bias that represented a risk of material misstatements due to fraud. How we tailored our group audit scope. We tailored the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statements as a whole, taking into account the structure of the group, the accounting processes and controls, and the industry in which the group operates. The group comprised 4 reporting components, of which we selected 2 components for testing, which represents the principal business units within the group and covered entities within Jamaica and St. Lucia. A full scope audit was performed for Caribbean Producers Jamaica Limited, as the parent company was determined to be significant due to size. Additionally, based on our professional judgment, CPJ St. Lucia was determined to be a non-significant component. As such, audit procedures were performed on specific account balances, classes of transactions or disclosures, due to the materiality of the individual balances, transactions, or disclosures to the consolidated financial statements as a whole. Key audit matters. Key audit matters are those matters that, in our professional judgments, were of most significance in our audit of the consolidated and standalone financial statements of the current period. These matters were addressed in the context of our audit of the consolidated and standalone financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on these matters. Key audit matter. Expected credit losses in relation to trade receivables, group, and company. Refer to notes 2H, 3A, and 19 to the financial statements for disclosures of related accounting policies and balances. As of the 31st of December 2025, trade receivables accounted for US $20.9 million and US $19.1 million, or 17% of total assets of the group and the company, respectively. Management identified a total associated expected credit loss, ECL, of US $2.7 million in respect of these balances for both group and the company. In determining the ECL for trade receivables, which have not been deemed specifically impaired, management applies a simplified approach and utilizes a provision matrix to determine the lifetime expected credit losses. This takes into consideration historical rates of default for each category of age receivables, as well as the estimated impact of forward-looking information. How our audit addressed the key audit matter. Our approach to addressing the matter included the following procedures, amongst others. Obtained an understanding of the methodology and assumptions used by management in the determination of the ECL provision matrix. Reperformed a calculation of days past due on a sample basis. assess the reasonableness of the ECL rates, including evaluating the impact of Hurricane Melissa on the receivable balance and the key macroeconomic factors against relevant independent external factors. Continuation. Management has identified key macroeconomic factors such as the gross domestic product, unemployment rate, and the inflation rate of the countries in which it sells its products to be the most relevant factors and adjust the historical loss rates accordingly. Based on the expected changes in these factors, in determining historical rates of default, trade receivables greater than 180 days past due are used as a proxy for historical losses. We consider this key audit matter due to the estimation uncertainty in assessing credit risk, in addition to the fact that the landfall of Hurricane Melissa in the western part of Jamaica in October 2025 impacted a large cross-section of the group's customer base. Management has determined that the impact of the hurricane resulted in temporary adverse aging of the trade receivables portfolio, and continuing with how we audit the applicable key audit matter. We continue by indicating that we have evaluated the reasonableness of management's judgments pertaining to the impact of forward-looking information on the ECL, tested subsequent payments for the payment of customers included in the age receivables as at year-end, assessed the age receivables subsequent to year-end against the age receivables as of the 31st of December to further assess the impact of Hurricane Melissa on the collection of receivable balances. And we also recalculated the ECL by applying the default rates to the age receivables balance. Other information. Management is responsible for the other information. Other information comprised of the annual report but does not include the consolidated and standalone financial statements or auditor's report thereon, which is expected to be made available to us after the date of this auditor's report. Our opinion on the consolidated and standalone financial statements does not cover the other information, and we will not express any form of assurance, conclusion thereon. In connection with our audit of the consolidated and standalone financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider when the other information is materially inconsistent with the consolidated and standalone financial statements, or where knowledge obtained in the audit or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the consolidated and standalone financial statements. Management is responsible for the preparation of the consolidated and standalone financial statements that give a true and fair view in accordance with IFRS accounting standards and with the requirements of the Jamaican Companies Act. And for such internal control as management determines is necessary to enable the preparation of consolidated and standalone financial statements that are free from material misstatements, whether due to fraud or error. In preparing the consolidated and standalone financial statements, management is responsible for assessing the group and company's ability to continue as a going concern, disclosing as applicable matters relating to going concern and using the going concern basis of accounting unless management either intends to liquidate the group or the company or to cease operations, or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and the company's financial reporting process. Auditors' responsibilities for the audit of the consolidated and standalone financial statements. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statements as a whole are free from material misstatements, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but it's not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if individually or in aggregate they could reasonably be expected to influence the economic decisions of users taken on the basis of these consolidated and standalone financial statements. As part of our audits in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatements of the consolidated and standalone financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and the company's internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis of accounting and, based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cast significant doubt on the group or company's ability to continue as a going concern. Excuse me. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the consolidated and standalone financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group or company to cease to continue as a going concern. Evaluate the overall presentation, structure, and content of the consolidated and standalone financial statements, including the disclosures, and whether the consolidated and standalone financial statements represent the underlying transactions and events in a manner that achieves fair presentation. Plan and perform the group audit to obtain sufficient appropriate audit evidence regarding the financial information of the entities or business units within the group as a basis for forming an opinion on the consolidated financial statements. We are responsible for the direction, supervision, and review of the audit work performed for purposes of the group audit. We remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identify during our audit. We also provide those charged with governance with a statement that we have complied with relevant ethical requirements regarding independence, and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence, and where applicable, actions taken to eliminate threats or safeguards applied. From the matters communicated with those charged with governance, we determine those matters that were of most significance in the audit of the consolidated and standalone financial statements of the current period and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosure about the matter, or when, in extremely rare circumstances, we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Report on other legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been kept so far as appears from our examination of those records, and the accompanying consolidated and standalone financial statements are in agreement therewith and give the information required by the Jamaican Companies Act in the manner so required. The engagement partner on the audit resulting in this independent auditor's report is Tricia Ann Smith de Silva. PricewaterhouseCoopers, Chartered Accountants, Kingston, Jamaica, dated the 30th of April, 2026.
Thank you, Tanisha. The auditor's report and the financial statements are now open for discussions. Any questions online or in person? Give it a few moments. There's 24, okay. All right, there be no, sorry, is there a question? Yes, sir. Oh, okay. Please introduce yourself for the record and state your questions.
Pleasant good afternoon, Lancel Bloomfield, shareholder. Mr. Chairman.
Sir.
Page 74, note 7. In 2024, your bank charges was US 77,341. And in 2025, this line item rose to US 277,833. Please inform us as to what are the possible causes of this increase.
Okay, that's the only question?
No, sir.
Okay. So Damian Dunn, our CFO, will come with me and we'll answer. But a number of things have been happening. We have been having more working capital financing. I mean, we did have a hurricane that impacted our business significantly. And I must give kudos to our audit partners, Pricewaterhouse, and to the finance team across the region. It was all hands on deck to get the audit done. Over $25 million US, over $20 million US of inventory were destroyed and could not be moved from the warehouse. That led to a significant piling up of containers at the port and elsewhere. So, I mean, our charges went up quite significantly, and that what you have there is a reflection of the additional interest expense for the working capital support.
Okay, understood. Mr. Chairman, same page, 74, note 7. In 2024, your professional service fees was $1,212,560. And in 2025, this has jumped to $2,225,142. What has caused this massive increase in professional fees?
A number of things have added up, but a significant driver of that would have been related to the ERP implementation. The new system Infor that was being rolled out across the entire business. And we did have implementation challenges and so additional support that we brought in. So that is directly a result of the ERP system that we're rolling out. I mean, the good news to shareholders that you'd have been seeing the quarter report that has stabilized substantially. And the impact on that, the negative impact has been more or less behind us. I think we're going forward now. I mean, but a lot of that, Mr. Bloomfield, was related to the rollout of the ERP.
If I may,
Yeah.
Mr. Chair, just also to add to one that just to put some context to these financial statements, So just to add some context to these financial statements. So the 2025 numbers you see there is a full 12 months, and the 2024 is 6 months, right? So.
Yeah, Damien did tell me to say that, forgot. So everything would double if in the like scenario, right?
No problem, Mr. Chair. Same page, page 74, note 7. Mr. Chairman, your impairment losses on trade receivables in 2024 was US $182,211. And in 2025, this has climbed to US $2,144,369. What has caused such a massive impairment loss?
So I want to remind shareholders and ladies and gentlemen that the hurricane would have created issues. So for example, a lot of our customers have been impacted, even the people who weren't necessarily destroyed, but suddenly they had no business, the hotels, etc. So for good accounting practices, we make provision for potential losses. And so a provision of approximately $2 million made for potential receivable losses. The good news on that is that a number of those receivables would have been recouped in 2026, and you will see that in the results, in a positive result for those in 2026.
Okay,
All right,
thank you.
Claire? All right,
Thank you
cool.
very
All
much.
right, thanks.
Good afternoon, Mr. Pandwe.
I thought you tired out, PB Scott. How are you doing? Good to see you.
Yeah, give God thanks. Boy, we can't have a meeting, you know, because we have a meeting, my morning is meeting.
Yes, of course.
Yeah. I see, how much time the board meeting met? Because I see your name on it, and I see Mr. Mark at 6 times, your time 6 times. So give a little expression on the board meeting.
The attendance?
Board attendance.
Yeah, I didn't look at it.
Can I see your name for 6, Mr. Markart?
Right. Yeah, you said.
Some of them absent and some present.
Yeah, I think 6 is around it. I'm the chairman.
Yeah.
So so my attendance is a reflection of the number of board meetings. So 6.
Yeah.
So is that the question? How many board meetings we had?
Yeah.
Yeah, around 6. Yeah.
The next one, Mr. Chairman, what are the plans for growth CPJ? And the next one is merchandising. We have export. I'm gonna show them the treat customer in foreign country. I want to treat them to the Jamaican Caribbean producers company.
All right. So I'm going to interpret the question is what's our plan to grow, and especially by exports, correct?
And the next one is merchandising. Like when the customer they come in and buy like Appleton or whatever one of the deal. Yeah, well, you know.
Yeah. On the okay, so okay. All right. So from a CPJ standpoint, I mean, one, if you don't mind taking this, I mean, but that's, you want to answer that? I mean,
a long time I come a CPJ now, man.
All right.
No, man, come on, say it now, man. We want to hear it, man. We have CPJ money, man.
Yeah, but let's talk about the export, for example.
All right.
I mean, in one's presentation, he spoke about the ecosystem of separate bride and CPJ.
Yeah.
It's important to understand that.
Yeah.
It's an ecosystem. That's what we're going to create value. And, we're plugged into the export network of this ecosystem, the distribution platform for bride and distribution platform of separate. And our intention when CPJ was acquired was not to keep it the same way, was to grow that phenomenally.
Yeah.
I mean, we've had a little hiccup with the hurricane and a couple of other things, but, it's part of life. That's why I have a diversified portfolio. And already we're seeing expansion to the export business. I mean, we're shipping our first container of burgers from the meat processing plant and bacon. Come and tell them, you should tell them the good news.
Every time me keep me coming.
In terms of our ecosystem, which is something that we discussed earlier this morning. So we are using our subsidiary company on Barbados to sell and introduce bacon hamburgers. The first shipment is on schedule to be dispatched this Friday. So we also distribute and ship to them sludge users and regular users as well. We are expecting to continue growing into the ecosystem, so we are behind the scene, we are preparing ourselves also to increase demand to ensure that we comply with those demands for the other markets.
So now, I want to treat the customer like in the supermarket or foreign. And they give me a sample of the taste.
No, so, I mean, in terms of the products, I mean, again, merchandising. So domestically, we have two things happening. So the food service business, like the hotels, etc.
Yeah.
CPJ took that over from Facey. I mean, one company going to the hotels, right? On the retail side, there are elements of the CPJ business that's coming into Facey in terms of our merchandisers or sales rep. We have hundreds of merchandisers or sales rep, far more than CPJ. And there are two things happening. CPJ, the brand, we're focused on. We think it's a phenomenal brand. It's a premium brand, and we're growing that. And we're growing the distribution footprint. I mean, our thing is about coverage, about being everywhere and having our product everywhere our consumers can see it and taste it and feel it. So, I mean, those are happening.
The reason why I ask this question is that shareholders can benefit because CPJ's money and we money.
Yep.
So we, the shareholder, can feel good when they pay a good dividend.
We work for you and we understand it. All right, thank you. Karim, any question online? That's it? All right. So that will conclude our discussion and question and answers. And I move that the auditor's report and the audited accounts showing the position of the company's affairs as at December 31, 2025, now before the meeting, be and are hereby approved and adopted. Can someone, who seconded the motion? The name for the record? Mark Anthony Garden? Okay. Okay. Can we have a vote? Yay? Aye. I said that right? Yeah. In accordance with Articles 102 of the company's Article of Association, the following directors, by rotation, are retiring from office and being eligible offer themselves for re-election. Mr. Stephen Dare, Anthony Markhart, John De Silva. So we're going to do each of them, okay? That's it. No, we can't do it on block. It has to be done individually. Will somebody please move that Mr. Stephen Dare, who retires by rotation and being eligible for re-election, be re-elected? Moved by? Again, name? Mr. Williams? Okay, you got the names? Okay. And will somebody please second? No, wait. Okay. So ladies, you can't answer for somebody else. Okay. Can we have a motion to declare the result? I mean, by aye? Okay. Will somebody please move that Mr. John De Silva, who retires by rotation and be eligible for re-election, be re-elected? Moved by? Okay, perfect. Will somebody please second? All right. Okay. Can we have a motion? Okay, aye, all right, good working with us. Will somebody please move that Mr. Anthony Markhart, who retires by rotation and being eligible for re-election, be re-elected? Moved by? Okay, seconded by Carol Leslie. Perfect. Can we vote on the motion? All right. All right. All right, so that's done. Congratulations to all three gentlemen. I move that the directors, next point is about the appointment and remuneration of auditors. I move that the directors be authorized to appoint the auditors for the ensuing year and to fix the remuneration of the auditors. All right. Okay, seconded by? Okay, Mr. Bloomfield, thank you. Can we have a vote on that motion? Perfect. Next point is remuneration of directors. I move that the directors be authorized to fix the remuneration of directors other than the executive directors for the financial year of the company ending December 31, 2026. All right, Livingston, Sir Livingston. And can we have a second? Okay, Mr. Nze, thank you very much. Can we have a vote on the motion? All right, excellent. Any other business? Is there any other business to discuss? David? Eh? Is this any other business? Okay, all right. Yeah, okay.
Printed annual reports today.
Sorry?
No printed annual reports today.
Oh, no printed annual reports. They have several.
Thanks. Afternoon, shareholder David Rose. First quick query. So when I was going through the consolidated financials, I saw 8.197 as advances to related parties.
Sorry, David, could you speak up a little bit?
Apologies. I saw advances to related parties of 8.2 million in cash flow from the consolidated financials. And when I looked at the standalone company financials, it says advances to parent company. And when I checked note 28 for related party balances, there's alternate parent company vis-a-vis fellow subsidiary of the parent company. So was it that 8.197 million was advanced to Separate and to AS Braden, or was it merely towards AS Braden?
All right, so we have been, I mean, I don't think you were here earlier. A couple of things have been happening, right, in the company, including some challenges with the implementation of the ERP at CPJ. So the group, this is the beauty of having a group, but I've had to make some support in that process. So monies were moved between the companies in a couple of ways, one of which is the support actually came from Bryden's, correct, Nina? The support, you want to come up? The support actually came from Bryden's to CPJ.
All right. And coupled with that, if you go to page 88, to the very bottom of that page, you'll see an amount due from the ultimate parent company of $5 million US, right?
Yeah.
That's really just timing. So there are some insurance proceeds paid to the company on the 31st of December, right? Literally at year end, right? But it was paid into a separate account, and separate passed on that money to CPJ at the start of 2026. So that $5 million is just timing, right? Separate collected the insurance proceeds on behalf of CPJ and passed on to CPJ at the start of 2026. So that has been normalized in 2026.
Appreciated. No, the reason why I asked the question is because I know there's going to be a lot more related party transactions and balances between CPJ and the related companies at this point.
Right.
I know you had just one of these things earlier, but I know last year you indicated that last year, July, we had the AGM, you indicated at the time that the company was having difficulty in implementing its new ERP system. Has that been successfully completed?
Well, I think, sorry, so I repeated a couple of things now. So that has been substantially improved. We did have some challenges, substantially improved. I mean, and the business is running as it should. But again, we went from that as a shock and went into Hurricane Melissa with a second shock. But I mean, we have substantially improved, and we believe that come end of October, as one Baez said in his presentation, end of October, November, with more hotel rooms opening and business, we can come back. Right. You'll start to see CPJ numbers going in the right direction. But challenging year, resilience, as he said, and overcoming adversity, that's what this year has been about.
Understood. Just to get some further clarification, so I saw there was a 24 million recognition of insurance claims as at year end, and
correct.
I'm just trying to find the receivables line right now.
You can jump on that.
Give me a second. So receivables would be note 19. So yes, I realized that there was a 24 million recognition.
Okay, so the amount receivable is included on page 82.
Yes,
the amount receivable at that year end, you could see that 11.7 million US there, right? A lot of that has already been received. There are some lagging amounts which are understandable, right? A business interruption claim is a very subjective claim, and it requires time for the insurance company to determine what the impact of the hurricane is on the business, right? The policy refers to 1 year after the event, right? So that's an ongoing process, but most of this money, most of this 11.7 million has already been received.
So basically, you recognize 24 million upfront as an income statement, and you have $11 million difference at year end, which means about 13 million would have been
No, the 24 million in the income statement includes this 11 million. The 24 million is recognized, some was received, some was receivable.
So there are other items that you wouldn't have fully recognized at year end based on the audited period, which you would have subsequently recognized in the following periods.
In 2026, and that will be recognized as received. So some claims will come in 2026, so some monies of this 11.7 million have come in already, right? The remaining, not much, of the 11.7 will come in as we go along. And also there may be additional amounts over the amount recognized in 2025 that we will book to income as we receive it in 2026.
Understood.
Thank you.
I know that the chairman probably is ready to rush and go, but...
No, I'm just time to stay.
So just to follow up, so the company, would have been carrying some lagging debt from the COVID days, and, the company continues to manage its liabilities on an ongoing, well, not liabilities in particular, but its debt on an ongoing basis between refinancing with banks and other external parties. There's currently a major $30 million US bond coming due next year, August, and just various liabilities I'm seeing across the different businesses. So with respect to the CPJ business in particular, is it that you foresee an opportunity to consolidate some of this debt into a better structure to match the recovery of the business environment to make the company have a better opportunity to manage its cash flows?
So I interpret that question as a piece of advice, and I will take it as such. And that's what we're doing every day. We look across our business, we look across our liabilities, how do we match them better? It's all about creating shareholder value, right? And part of that is making sure we manage. You have to there's nothing wrong with debt, as long as the debt is generating returns that are positive to the business. So, what you just said is being done every day by a team of people. We have Nicholas Scott and his crew, we have the team at CPJ, we have Damien Dodd, we have a number of things looking at this right throughout the business. But what we are committed to is making sure we invest to give the best possible return on shareholders' capital.
Understood. And one query that, I'd like to get some context on is with respect to St. Lucia. St. Lucia would have had a significant turnaround to the tune of about $1 million difference year on year. What was responsible for what was the main driver that resulted in the St. Lucian subsidiary reporting a profit for the year-on-year comparison? Oh, apologies. I forgot that the prior year was 6 months. Apologies.
Correct. 6 months versus 12 months.
Yeah, apologies. But what was the main driver in terms of improved earnings for the subsidiary for the full 2025 financial year?
We're doing in St. Lucia what we're doing everywhere. We're going there, we'll find opportunities to drive the synergies. We have people on the ground. We're looking to expand the business. One that I've spoken about, the additional exports that we're doing. And then we also have to determine what we're going to do and what we're not going to do. We have exits in some of the business lines in St. Lucia, but huge growth opportunity in St. Lucia. We're just about now, hopefully, to embark on expansion of the warehouse there. We have been recognized by a major company to be their distributor in a couple of countries, with St. Lucia as one. So we're working. We're using the bandwidth of the group to create opportunities for all the subsidiaries. And what you're going to see going forward is at St. Lucia, we're very bullish on St. Lucia. Very, very bullish on St. Lucia and the Eastern Caribbean in general. We see huge growth opportunities there. And by the way, and a big part of it, we're going to integrate backwards into the manufacturing facility at CPJ in Jamaica. The meat plant, the processing plant, juice plant, huge opportunities for those parts of the country, part of the region.
Appreciated. Just a couple more questions. I know you're probably ready to go to something else in your life. So, in your chairman and CEO's report, there was mention of the great opportunity to do deeper integration into the wider separate and broadened ecosystem, and you kind of spoke about the backwards integration on the manufacturing standpoint. I know last year you'd have spoken about a specifically carved out space at a separate warehouse for some of CPJ's products to be stored as one example of integration. With respect to the retail integration or opportunities to grow that segment, how is that being manifested in the separate and broadened ecosystem right now? Integration with Facey, for argument's sake?
All right, just some basic examples of what's been happening. So, for example, we had Facey had a warehouse rented in Montego Bay. That's been consolidated into the CPJ facility, which are arm's length transactions. So we're utilizing space better and keeping the money within the organization. I mean, on the flip side of that, the food service to the hotels has been consolidated within the CPJ system. They have exceptional people when it comes to going to the hotels and the relationships. Hugh Logan leading that team in the West. I mean, they have. I mean, the beauty of this group is that we have expertise that we can now leverage right across the group. In the case of the retail pivot, in the Facey organization, we have Chana Hay, the general manager, who is phenomenal at what she does with her team. And so they're using that now to drive the CPJ brand expansion, throughout the country. Now, are we there yet? No. I mean, it's certainly not. We have hit key milestones. So, for example, prior to this acquisition, all the containers coming in for CPJ, the ones that came into Kingston, most of it had to be taken to Montego Bay.
Yeah.
And then 40% of your sale is in Kingston and St. Curtin. They have to be put in a truck and come back on the toll and sell, then they have to go back. No, those products go straight into a Kingston warehouse. I mean, so they cut down the cost dramatically, quicker time to the consumer, so improve your customer service level. It allows us more time to sell as opposed to us driving around. Those are some of the examples that are going to accrue to the business and to shareholders ultimately.
Appreciate it, Richard.
No, thank you, David.
And just to get some appreciation as to what's happened, I would not have been here for the early part of the meeting.
Right.
So in the annual report, it showed part of the damage to the facilities. I see something about reference to a huge yard sale in April 2026. And I recall, CPJ having a similar disruptive moment back in COVID, when, COVID would have come at a time when they were bringing a certain amount of inventory into the country for that relative season. And you'd have also been in a similar situation with the hotel winter season coming up by the time Mesa came around. So, first part of the query is, after Hurricane Melissa and the reduction in hotel capacity and occupancy and so forth, like, how did you, reduce the inventory that built up for the hotel?
Right, so as we had said earlier, sorry to sure I was repeating a lot what I said before, but over $20 million of inventory was destroyed. I mean, so we had a reverse effect. So we had that to deal with, which is being dealt with an insurance claim. And then the other part of it is that the goods I had left, you suddenly had an excess of inventory, because with 60 or 70% of your hotel rooms closed, all those wines, etc., so they didn't have a home to sell to. So that's what we're trying to pivot into the retail space, etc. But ultimately, I mean, what we need is for the hotels to reopen back the rooms to get going, visitors to come back to Jamaica. I mean, you saw this year, I mean, Sumfest was reduced to one night, had to be moved from Montego Bay. I mean, when you sit in Kingston, it's hard to imagine the impact of the hurricane has had on the West and continues to have. And we're not immune to it, but we certainly feel optimistic that come end October, November, recovery will be on the way in terms of the hotels. And we wish our hotel partners well. They're very important to us, and we continue to support them and stand by them as they go through this process.
Understood. And with respect to, that excess inventory that I've had coming into the 2026 period, I guess you'd have done some level of retail sale
No, but I'm saying that $20 million of it was destroyed from the hurricane.
I get that. What I mean, the excess inventory that was left over into 2026, how did you ameliorate that then?
We're still in the process, David.
Oh, wow.
I mean, it's only June, July, I mean, it's when you build a business that's built on 4 million visitors, that's not turn up. I mean, it doesn't disappear like that. We continue to recover from the hurricane. I mean, we continue to recover, and we continue to try to mitigate some of those things. But I think many Jamaicans continue to believe the Hurricane Melissa is gone and done. a lot of us are still feeling the pain.
Understood.
So buy a bottle of wine when you leave.
I don't drink alcohol. But I have two queries then. So one, who said in St. Lucia now?
We have Rakesh Bernard, the CEO for our business in Barbados and the Eastern Caribbean.
Oh, I didn't realize that St. Lucia acted as the hub for the Eastern Caribbean business of CPJ.
Absolutely. I mean, it's not just St. Lucia, we're moving it into St. Vincent as well. So that's how we do things, David. I mean, so for us, the individual countries are not, it's what they do in the ecosystem. It's about hubs. Hubs creating hubs and moving around. So I mean, that's how we're transforming the business. That's not how it was, that's how it is now.
No, understood. So just to clarify then, so your point's not that Eastern Caribbean is going through a level of expansion vis-a-vis, or should I say through the business opportunities across the Eastern Caribbean and other markets like St. Vincent, as you mentioned?
Yeah, I mean, those countries are so similar to Jamaica. I mean, when you can't look at the population size, you have to look at the visitors. They're tourist-driven economies, and we know this business well. And we're going to leverage our skills and our expertise across those markets. St. Lucia is very similar to Jamaica. St. Vincent is all very tourist-dependent countries. So, yeah, grow to us.
Appreciate it. And just, a final query. So I know that CPJ would have captured part, I believe it was the LVMH portfolio when it was divested by the Renefit Group. That's correct?
So Moet Hennessy,
Yes.
who is our partner in Trinidad and Tobago and other markets. I mean, we got the Shandon and a couple other brands in the business. Yes, yeah. I mean, what's the specific question?
No, I just wanted to clarify that first before I get into my question. So I recall that, the company has two trades of business, one being, in this case, distribution of purveyor of wines and spirits, and also its proprietary portfolio, as you mentioned, protein, processing plants, and so forth.
Yeah, food and premium beverage, yeah.
So as part of the, way forward in terms of, being further resilient outside of retail, have you seen opportunities to introduce new branded products or partnerships to build up that resilience, or in this case, further diversify the business and grow further sales?
Yes.
Any specifics?
No, we have competitors watching this too. I'm not going to put my business out there. I can talk to you offline, but I'm just saying we're always looking for opportunities for growth. And if you recall, even just in the hotel sector, let's, for example, that partners at Facey would have had, for example, Heinz, etc., have now become partners with CPJ into the hotels, something I didn't have before. Twinings, tea company.
Or Twinnings?
Twining, right? The CPJ had like 11, 13 tea brands before, none of which can compare to the size of Twinings, and now have Twinings. So those are examples of how we are moving the business forward that they now have in the hotels. I mean, it's huge opportunities. I mean, we're coming to the way we do things, that we come to grow profitably. And we're going to do it by working with partners or principals. Super important that we get the right principals, continue to work with them, build our own brands. CPJ brand, we say it's a premium brand. We see it as a premium brand to grow. And so it's not a company, a brand. So, I mean, that'll be super important throughout the region. So, I mean, yeah, we're going to be in full growth mode. I mean, obviously, I'm not going to come to AGM and put our strategic plans out there for everybody to see, but we're going to ask you to judge us by the results. Yeah.
Thanks, Richard.
Thank you. Any other business to be discussed?
Hi, good afternoon.
Hi, how are you doing?
Reagan. I am great. How are you?
Well, Natasha, what's the question, please? Let's jump.
How long have you implemented AI into
I knew
CPJ
you were coming with
business?
that question. I knew you were coming with that question. I was going to anticipate it, but I said, let me make it ready.
Yeah.
I can't speak about technology, right?
Yeah.
We're in the business of driving growth and productivity. I think Jamaica continues to have a massive problem with productivity, and many companies. to create real wealth, you have to be highly productive, and that employs deploying technology in whatever form. A lot of conversation around AI, etc. now, and obviously it cannot be avoided, but we're doing it in a responsible manner because we don't want to expose ourselves to cybersecurity risk, because you see that's becoming increasingly an issue. So we manage responsibility, and we have the advantage of we're part of a larger group, the Mossen Group, which is probably the dominant or the leading technology company in the entire Caribbean. And I mean, so we do have expertise throughout. So I hope I answered that question.
Well, you haven't put a time frame on it.
It's continuous. I mean, it's every day AI changes, you know.
So when did you begin?
No, we have begun.
All right, since you go on the question, all right. Has AI saved CPJ any money?
As technology, everybody's just fascinated with this AI thing. A lot of people don't understand. Let's talk about technology. The deployment, it's a part of technology, right?
Yeah, it is.
Right. The deployment of technology, the major project in CPJ has been the ERP implementation to drive better data analysis and also to make faster we react to customers and consumers, etc. So, we're using technology every day. It's in the finance era, it's been used for bank reconciliations, speed to market. So yes, it's being used every day. It can't avoid it. It's a part of the system. I don't know which questions answer directly for this, but for example, all our vehicles, our route to market vehicles, you can go on a computer screen, touch it, and know what's in the vehicle, how long it's been on the road, what's the inventory. That is technology.
Yeah, but how much money has technology saved you?
I don't have that answer. I promise to get that answer going forward, but I don't have that answer.
You have changed, Last year this time you would have answered every question.
But I don't know. I don't know the answer to that question. Last year and this year are two different years. We had a very disruptive event in CPJ. You recall with Melissa. It has really. It's hard to compare like that. Year to year, you know what I mean?
All right, were you growing because of better execution or just because tourism is booming?
Sorry? If we're growing, you're asking if we grew because of better execution or if tourism is booming?
Because the tourism was up and booming.
Well, so prior to Melissa, Jamaica has been enjoying phenomenal tourism growth. More hotel rooms are being constructed and, put out there, and that is definitely a key driver to the business, a very important driver. I have to overlay that now with better execution and making sure we can, be the partner of choice to people as they grow. So, but the primary driver for the business definitely would have been the increase tourism business, yeah.
So how badly has the war in Iran affect the business?
How badly the war affect the business?
Yeah, the logistics.
Supply chain is a problem everywhere, but the fact is that you're talking in 2026, we don't have the rooms open. 60% of the rooms are available. So, that has kind of offset a lot of the challenges that would have expected. I hope the rooms open back. I hope to have challenges for filling, supplying them, but right now it's the opposite.
Okay.
But,
all things are possible with God.
Truly.
All right, thank
Respect.
you for
All
your
right.
answers.
Yeah.
Livingston here again, Mr. Pandwe. Page 64, note 3A. It's a financial risk management. This is a company, 2025. You there, Mr. Chairman?
Yeah, the email is there, yeah.
Yeah, gross amount. Within 30 days, within 31 to 60 days, within 61 days to 90 days, 90 days, 180 days. This is in US dollars. US dollars.
Yeah, CPJ is always in US dollars.
All right, gross amount of 10,170,994 cents. 31 to 1,724,000. You can give an explanation the gross carriage amount.
You want to try? Yeah.
Okay.
So was carrying them on. I think
right.
that was a definition.
Right, so you refer to note 3A on page 64, which gives a breakdown of the gross amount of our trade receivables that fall within these buckets here, within 30 days, or those within the 31 to 60 days, is right within our trade receivables portfolio.
Yeah.
It's the aging.
The aging of our receivables, and it gives the provision, bad debt provision that relates to each one of those buckets there.
Is this a waging of advance expected losses?
Right. So
0.4.
a more common term is just a provision for receivables.
Oh,
Right?
yeah.
Or the bad debt provision for each bucket of receivables.
Okay.
Right.
All right, Mr. Chair.
All right, thank you. All right, there being no further business, I declare the meeting adjourned. Thank you, Chair Rose. Have a great evening.